Hello guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. The dollar fell to its lowest level in more than 2 weeks against a basket of currencies on Monday following recent strong gains as investors grew nervous ahead of US inflation data and as central banks outside of the United States appeared increasingly hawkish. The euro climbed to more than a 3-week high against the dollar, with European Central Bank officials arguing for further aggressive monetary tightening. Strategists say the release on Tuesday of the monthly U.S. Consumer Price Index report will be closely watched for clues on how aggressive the Federal Reserve may need to be in hiking interest rates next week to fight high inflation. The Federal Open Market Committee, the Fed's policy setting arm, is expected at its September 21 meeting to raise the central max. The dollar index, which measures the currency against six major counterparts, has been strengthening on expectations of an aggressive Fed and reached a two-day peak of 11 last Wednesday. On Monday, it was down 4% on the day at 31 after hitting its lowest since August 26. It's been a break in the dollar's relentless rise, said Joy Manimbo, senior market analyst at Convera. What's behind that basically is improved risk sentiment, hawkish central banks from abroad, and hopes that U.S. inflation will suggest that the worst is behind U.S. with consumer price coming out tomorrow. One of the things that helped to limit bouts of dollar weakness is sight of a resilient U.S. economy, Manimbo added. The New York Fed's monthly consumer expectations survey showed on Monday that U.S. consumers' inflation expectations slid further in August as gasoline price extended their steep decline from June's record high, a development likely to bring some relief to U.S. central bank officials who have been worrying that the highest inflation in 40 years might change consumers' perceptions of how sticky the current price hikes may be. The euro rose against the dollar to its highest level since August 17. It hit a 20-year trough of 98 last week. The euro was less up 7% at 11. ECB policymakers see increasing risk that the central bank will need to hike its key interest rate to 2% or more to curb record inflation in the Eurozone, sources told Reuters. At the same time, the ILFO Institute said on Monday, in a U-turn from its forecast 3 months prior, that Germany's economy will contract next year as a dramatic rise in energy costs due to the Ukraine war extinguishes the chance of recovery after COVID-19 lockdowns. Against the dollar, sterling was last trading at 11 up 8% on the day and up from last week's 37-year low. The dollar was up slightly against the Japanese yen at 14 yen, but off the 24-year hike of 11 hit last week. Over the weekend, Japanese officials hinted at intervention to stop the currency from weakening further. A senior government spokesman said in a local television interview that the administration must take steps as needed to counter excessive yen declines. Okay guys, maybe that's all from me. Thanks for watching and don't forget to like, comment, share, and subscribe.